This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here on today for our program. I'm Cesar Delgado on today. We were listening to from Jeff Piper about farm bankruptcies from this year. Jeff is an attorney in Iowa at Ag and Business Strategies in Hiawatha, Iowa. Otherwise, uncertainty within the grains markets with the trade barriers for right now with China. If we will see for any inconvenience caused by the trade in the beans and how compare the export numbers for the last few years. The fear of losing demand in China with beans. We were talking about that with John Heinberg from Total Farm Marketing. This been Back Roads of Illinois.
The Administrative Office of the United States Courts points out in the first 6 months of 2025, 181 Chapter 12 bankruptcies were filed nationwide. That's up 57% from what it was in 2024. That's more filings than we had in either 2022 or 2023.
This year is a lot of farm bankruptcies from this year. They filled with Chapter 12 to be bankruptcy in the agricultural because many farmers are concerned about the payment for their grains and crop production inputs cost. Joe Pittfer from Ag and Business Strategies in Hiawatha, Iowa. He says that the president is lying on the tariffs for right now with these situations.
Now, China is buying soybeans from Argentina. It's been buying soybeans from Brazil. Once you lose a market like that, the chances of getting it back are really slim because we're no longer viewed as a reliable supplier because of the trade things that are going on.
China is buying beans from Brazil and Argentina. Joe say, once you're losing their market and the margins is really slim and demand is lower than expected, then you're losing your revenue and your business.
He's scared. He's afraid of what it's going to be like to tell his wife about it. He's embarrassed because he brought in family on both sides to help keep the operation running. So he's scared. He's afraid of what are people going to think. Am I the failure that lost the family farm?
The farmer is afraid to lose his revenue and he is scared to talk with his wife about that they are losing their farm operation because they lost their customers. Thanks to Mike Davis for the audio. Uncertainty within the grains markets with the trade barriers for right now with China. If we will see for any inconvenience caused by the trade in the beans and how compare the export numbers for the last few years. The fear of losing demand in China with beans. We were talking about that with John Heinberg from Total Farm Marketing. Hey, John, how are you? And we were having a lot to.
I'm doing fine. Doing well. Now we're into October. A lot of things to handle here. Obviously, we keep talking about my football and my Packers. Funny couple of weeks, but so grain market's got a lot of stuff going on. So let's get right into her there, Caesar.
Let's turn to the grains quarterly report from Tuesday. What is your thoughts with this report?
All right, let's get right into the corn market side of that. That's where the negative side of this comes from. I had a hunch this was coming. I thought about this a long time ago when the July-December spread, because of that demand, it just never got kicked in, and we never saw that cash market just look tight. Just kind of made me go, there's more corn out here than we realized. And that got confirmation on the report on Tuesday. About 200 million bushels, 25 million from extra production, and then a big portion is going to be coming out of the residual area, which probably is the feed area. Kind of felt for a long time that feed and residual has been overstated, just given the cattle numbers, and then we got the quarterly hogs and pigs, which those limited numbers as well. So I wasn't surprised by the numbers in that regard. Don't like them, but had a hunch it was coming. Now what? That changes the balance sheet again, because now we got to put that 200 million bushels in. Carry out from last year, which is the carry in for this year, is now 1.54. That's a pretty big jump up, and that's the corn market was kind of trading that, I think, realistically. Then throw on top of it, even though the yield is coming down, and we'll talk about that a little bit more here too. But you're still looking at a large supply of corn out there, at 2.3 billion. And I think there's some demand overstatement in there in that balance sheet for the next year. It really kind of mucks up the whole works there in terms of how we're going to get through the numbers. Now, with that, government shutdowns here now, information kind of dries up in terms of export sales and next week's WASD and things of that nature. So we got to focus back on the cash market and the flow of grain and things like that. That's going to be driving the futures price here. And with producers heavy in the field, well, grain slows down a little bit. Maybe that's some of the strength that we're seeing here these next couple of days is guys are not worried about selling it. They're worried about harvesting it because it's drying down quickly in some regions. So that's the biggest thing, I think, on the report. We can touch on the other two. Soybeans, nothing major there. We did see the carryout tighten up a little bit. Usually we know the bean numbers pretty well, given what the crush is, what the export demand is. There's some wiggle room with residual supplies. On the wheat side, again, that larger than anticipated carryout, which is not helping out the corn side of it as well. Grain stocks, 2.12 billion bushels. So now we just got a lot of cereal grain that's going to be competing out there, and that didn't help out the corn side of it too. So again, let's just see how we process here. But unfortunately, barring some major changes in yield, and we can take a lot of yield out of this corn crop before we really start moving the balance sheet around. Corn crop could get pretty heavy if prices start rallying just because of the burdensome supply.
What is the technical aspects from Tuesday report, John?
With adding those bushels in, my first big question is I'm going to be a little bit, maybe negative today on the corn side of it. We broke down, we went and tested some lows. We did reverse out nicely, led by that soybean market on Tuesday or Wednesday, we saw some demand kick back in before the government shut down. So maybe that's an area we find some good support. But I think we're building ourselves possibly a new range here. I was kind of in the 425 to 420 to 450 type range. Now that report comes out, does December corn now have a $4.30 to $4 range? That's what makes me a little bit nervous here. So that's something I'm kind of keeping on my radar just because of those extra supplies. Now, nice turn yesterday, good follow through today. But boy, we got a lot of resistance up on top of this thing around that 430 area. We've tested that a couple times and failed. If we can get through there, then it changes the momentum a little bit. But boy, that's going to be some pretty heavy resistance up above that 430, 432, 433 area.
How about the fundamentals on the beans really quick, buddy?
Bean side of it comes down to the Chinese demand side and the yield. Now, I'm starting to hear some yield trends that are hanging in there pretty well for beans. It just seems like guys who had some moisture going into August, even though August was dry, the bean yields have hung in there pretty well. I mean, they're not phenomenal. They're not blowing out through the top side, but they're good. And, I think guys who were dry going into that or had some different planning schedules, that's a different story. But I've been hearing a lot more positive bean reports this week than I heard last week. So maybe that yield does come down some more, but maybe it's a 52, 51, somewhere in that area. Not a total, disaster by any stretch. So that quickly the comes on to China. Obviously, it kind of steps in the market, buy some beans. We've got some optimism because of President Trump's tweet yesterday. We'll see what's going on with that. That's another reason beans are higher again today. That keeps the balance sheet fairly tight. If they don't step in the market, that balance sheet gets very heavy quickly. You got a market that's pretty negative right now, just given the media and the news reports out there, the anti-bean trade news articles that are out there. Feels like this market, if we get some type of sale, it's not be anything. This market pops pretty aggressively on that type of a news. So that's kind of where we're at right now. But it's still a wait and see mentality in the bean market, especially on the fundamentals, just given.
Of course, we see a rally for the cattle markets for right now, but what's next for the cattle markets with these prices and consumer budget, NWS?
Cattle markets had a little pop, but now we're falling back weaker here. Fundamentals have been turning fairly negative. Cash trade this week's going to be softer again. Maybe getting a little 233 in the south. Here's some 230 in the north, and that is down significantly from where it was just a few weeks ago. Retail values continue to be soft. So there's some money flow out of the cattle market right now. Triple digits lower today, 3 to 4, even up to $5 lower on feeders today. So right now I'm a little concerned that we got ourselves a little bit more of a technical pullback in the cattle market, and then maybe we can find some footing in because the long-term numbers are still not friendly in terms of supplies. It's friendly to price, but not friendly in terms of cattle numbers. So that would give us some strength maybe in the 26. So we'll have to see. But right now it just feels like the cattle market's gotten tired, and they're seeing the money kind of react that way, the managed money, the funds, as they've been walking away from their long positions and, maybe giving themselves some ammunition to step into this market going forward. So with that, right now the cattle markets maybe at a bit of a crossroads. Disappointing close today opens us up for some further pushback. But I tell you though, if we do get some more weakness, this thing drops $3, $4, $5. Also, some of those April contracts, February contracts might start looking a little bit cheap, given the cattle numbers and based on possibly where the demand could be.
What is the technical side of the feeder markets for right now?
Again, same situation as the live cattle market. Difficult close today. Really opens up us a break here and some downside. The other side of it, too, you got the cash index was trying to catch up to the futures market, fairly softer here again today as well. So, right now, again, the feeder market looks like the charts are a little bit technically broken. Looks like there's some more room for this market to move lower as the money flows out of it. But again, those supplies could continue to be a factor here, especially if corn prices were to come back down and test some of the lower levels. But also that feeder market might look a little bit cheap again out there. So that's something I'm kind of watching here. So I'm short-term bearish, just given the way the charts are looking in the cattle space. But I think that might be an opportunity to get some movement to the upside.
Final thoughts about the fundamentals with the grains markets, especially with the old crop. What is your position on the fundamentals?
So right now I'm a little bit supported by the equation. It's pretty negative. All we need is a little positive demand news, get some Chinese action. Market moves very, very quickly to the upside. We saw the response just off of a tweet on Wednesday. But again, still longer term, still a little bit cautious there. Corn right now, I think it's going to be heavy. I think we can still move high. I think the demand is still good, but I think there's limits to our rallies because of the supply. And that's just going to make me turn a little bit more longer term cautious that if we got good value out there, I want to make sure guys are protecting the bin. There's a lot of carry in the market. I'd rather be wrong with puts and leave the bushels open to the upside if you're storing bushels out there.
Thanks, John. I enjoyed our conversation, but the bears are getting better.
I'm not going to disagree with you there. So But we'll see. We don't play for a while. Packers and Bears, that is.
John Heinberg from Total Farm Marketing, One Back Roads of Illinois.
No.